Good morning, everybody. Hey, welcome to this Thursday, the 4th of April. Hope your week's going well and the month is off to a great start for you. Hey, yesterday, mixed bag on Wall Street. The Dow just could not quite get to green ink. The S&P and NASDAQ and the Russell 2000, some decent returns yesterday, if not slightly, but still in the green across the board on those indexes. We'll talk about that and more when Dave joins us here in just a few seconds. Hey, before we do that, though, let's not forget that in this world we live in, there are so many things out of our control. You can take control of your investment portfolio by taking care of and knowing the amount of risk you have in your portfolio and comparing it to what it should be during your current circumstances. Give me a call at 863-382-0037 to walk through our core retirement analysis. With that, we've got Dave coming up next.
That's Winston Hobby and Company there. No doubt it's 8:41 here. 19 before 9. Time to check in on money and find out what's going on Wall Street this morning. Just for a change, because we're going to be novel about this junk, I've actually got some green ink this morning. It actually feels good to see it for a change. Forgotten what the color looked like for a spell. Go downtown to the offices of Statler Financial Services. Phillip Statler's on the line. Good morning, sir. How are you?
Hey, good morning, David. Doing well today as we are getting halfway or a little over halfway through this first week of April. And the first 3 days were a little iffy, but today we're looking kind of bright.
They were. I was actually feeling halfway good about looking at the markets from yesterday. I mean, we're looking at the Dow finally slowed its decline down, only down 43, and Standard & Poor's and NASDAQ were up fractionally into green ink. Maybe, just maybe, we're done with the sell-off. And then yesterday, Jay Powell, our friendly neighborhood Federal Reserve chair, hit the rubber chicken circuit and said, yeah, don't worry about it. We're going to cut rates, just not going to tell you how many, how far, and when. And then we're looking at just a little bit of optimism. It doesn't take much. Buyers really wanted stuff. And we got the unemployment claims out this morning. First-time claims up from 210,000 last week to 221,000 this week. I was kind of thinking that was statistical wobble, but from what you're telling me on the futures, we really are looking for an excuse for optimism, aren't we?
They definitely are. I mean, I'm telling you, when that first hit, when that number hit the wire, the futures just went crazy for the most part. Almost not quite, but coming close to doubling where they were across the board. So it's yeah, you're right. They're looking for anything positive that they can buy up the market.
Evidently. And the Challenger job cut report came out earlier this morning, got something very similar in terms of that. They're expecting 90,000 layoffs this month. That's a 7% increase from last month. Now, that sounds like one of those modest increases that indicates, okay, the employment economy is slowing down just a little bit, but it's still way down from the first quarter of last year. So once again, if you're an investor just looking for an excuse to feel good, well, we got a couple of excuses going for you this morning, don't we?
Yeah, we do. And but it's a little tough, at these, you and I have talked about, the PE ratios and such as that, but it's an expensive market right now. And I saw one headline that says we've not seen this kind of bull market since 2018. So it's a little concerning as to how high we're getting right now.
Yeah, it is that. It's something that I've been saying for a little while. Flat wouldn't hurt my feelings a bit at these nosebleed levels, just to allow the profits to catch up with the price of the stock. I saw that same article. They were saying that investors are so bullish, it's amazing since, 2018, something like that. We haven't had it that good. And I'm saying, well, we just had 2 rotten days, so all of a sudden we put it together and optimism comes back with the slightest of all possible stimulus. You had a tidbit that I found kind of interesting, and I just saw it cross my ticker as well a few minutes ago. I flippantly said, but I think it might be accurate, the first smart thing I've heard come out of the automotive industry in years. Ford is saying they're going to de-emphasize electric vehicles and start putting their efforts into hybrids. My Lord in heaven, somebody must have hit them with a 2x4 and got them some common sense.
Well, let's specify a little bit, because it's not across the board that they're going to do that, Dave. It is the 3-row SUV market. I guess they were getting ready or working on a EV for that product line, and they are holding off on that and focusing more on creating hybrids across all sectors of their lineup, which I think is good. I mean, it makes a lot more sense to me that you get the benefit of some electric, but you also get the benefit of, hey, I can go across country and don't have to worry about charging stations. I just got to find a gas station, and that's much easier than trying to find a charging station.
I think you and I have both digressed into that topic a number of times over the last few years. Yeah, I believe electric will eventually be the power of the future for vehicles, whether we like it or not, and the technology will eventually catch up. But until I can't just hop in my car after getting some news that requires my presence up north and drive 8 hours without having to plot out every single charger that I got to stop at, it's not working for me. On the other hand, hybrid, I can see the merits for, and it actually makes some sense. Like I said, somebody hit them with a 2x4 and knocked some common sense into them.
At least to Mr. Ford, anyway. You know, that's nobody else has come out with that determination yet. But Ford is really, and it's helping them out today too, Dave, on their stock price. They're up a little over 1.5% just on that news this morning.
And that should be. I'm optimistic to hear that. It does sound from the article you're quoting there that those of us that prefer smaller sedans, though, are still going to be plugging our cars in 10 or 15 years, right?
Well, I mean, that definitely. I mean, here's the deal: they put it off to 2030. So they want to get their hybrids across all of their lineup by 2030 for the hybrids. So well, good news.
That makes me optimistic. Just overall consumer mood in general. There was a thing that came out this morning that I mentioned that, okay, you and I have been talking about 3% inflation. It doesn't look like it's going down anywhere near the 2% that the Federal Reserve wants. Overall, investors' confidence in inflation going away has been going up, or more accurately, inflation worries are easing. We're now down at the lowest rate worrying about inflation that we've been since way back in like 2020 before this run-up happened. Evidently, the politicians have been talking to us enough to the point where we're sick of hearing about it and we just stopped worrying about it.
Well, you know, yeah, maybe that's the case. And until we really start, I mean, from an investor standpoint, I guess that's probably true. But for you and me, rank and file folks down here, common people, you know, it's still a fear because it hasn't gone away, and we don't see it going away right now, and so that's still a little concerning for us.
Yep, that kind of surprised me that investors, at the very least, which is what this chart was showing, worrying about inflation less than the consumer. I found that mildly intriguing. Earnings season hasn't completely gotten underway, but we got a couple. Well, two names. One is a household name. The other is a name that makes household names. How are my jeans selling lately on Levi's?
Hey, Levi's had a really good quarter. They earned 26 cents a share versus 21 cents expected. They eked out a little bit of an increase in revenue at 1.56 billion, and they even uplifted their full-year profit guidance. So Levi is looking good this morning, up 13.25%. So not a bad day for them to start off with.
Not yet. They got to be big enough to be part of the S&P 500, aren't they?
You know, I'm not 100% sure.
They're a new enough issue where neither one of us are 100% sure where they are. I know they're not big enough for the Dow, but you know, we've been talking about Levi's jeans since God was a child, and they just went public a couple of years ago. So it's a household name that suddenly now should be bigger than it probably is.
Yeah, they're done well. So.
Oh yeah. Back when I lived in the Midwest, we knew the name Conagra real well out of Omaha because they made just about everything that showed up on the grocery store shelves. On a consumer basis, you don't hear much about them, but they're a big ag company.
Oh, definitely a big ag company, and they had a decent quarter as well. Now, it was their third quarter in their fiscal year, and they beat on earnings and revenue. They beat on earnings by about 4 cents a share, came in at 69 cents. Revenue beat by just a tad, but hey, a beat's a beat when it comes to revenue. And so they were trading up this morning, still up almost, well, right at 5% this morning.
Nice place to be. Resetting the table for the morning. It net turned into a whole steady day yesterday, and that's good news after the first 2 days of the week. Dow was off by a tinge. Both the S&P and the NASDAQ were up by a tinge yesterday. Let's hope the bleeding stops. 45 minutes before we open, kind of alluded to it. How big is the optimism at the moment, Phillip?
Pretty optimistic, Dave. I got to think at this open rate that it would take something newsworthy to reverse this trend, I would think. The Dow's up $213. That's a little over 0.5%. The S&P 500 is up $35, almost 0.7. And the NASDAQ 100 is up $161, and that's up 0.9%. So everything's got solid green around it. Now, on the other side of the coin, Dave, silver really popped yesterday after you and I talked. It actually has crossed over $27 an ounce at $27.06. Now, that's not up much from the close yesterday, but yesterday that means that thing really took off over $1.50 yesterday. So gold is down about 0.4 right now, and crude oil is down below 85 finally, at least right this second, down 0.6 to $84.91 a barrel.
Well, thank heavens for small favors. Get it down around 70 and I'll start cheering.
Yeah, exactly.
Overseas markets, Asian Rim kind of responded to our yesterday, and they said, we're not seeing much yet. The indexes in the Asian Rim mostly down in the 0.5 to 0.75% range at the 6 a.m. close. Europe, on the other hand, is looking at our futures and saying, oh, thank goodness, they're back in good humor. Overall indexes across the European community up between 0.25% and 0.5% halfway through their day. So optimism in Europe, looking at our futures. Not pessimism, but at the very least boredom in Asia based upon our yesterday. We'll see what happens tomorrow morning. Phillip, I need to know how to stabilize my retirement. I'm getting old. How do I find you to make sure I can retire the way I planned on it?
Hey, Dave, all we have to do is walk through our core retirement design where we'll analyze the amount of risk you have in your portfolio and make sure that it lines up with the amount of risk you should have in your portfolio. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And you and me together again tomorrow for another last look at the markets for a Friday, right here on Light FM. Phillip, I appreciate it, and I'll see you then.
All right, babe. Have a good day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. It's not.
Hey, folks, again, I want to thank you for joining us today. I hope your day is off to a great start. Join us again tomorrow as we focus on what's happening as we head into the weekend. Take care, and I'll talk to you tomorrow. Bye now.